I want to go shopping. But how much deposit do I need to buy a house?
Well, today we'll take you through what deposit you need and how you can get in that home sooner.
Naos, the most important question, I'm earning good money, but how much deposit do I need to buy a house? Do I need any deposit?
The banks generally are after anywhere from an 8% deposit to 10% of the value of the property as a deposit to purchase.
Because usually in every state, there's going to be different rules around stamp duty and other costs. But like Nathan said, having about an 8 to 10% deposit will give you enough to put down your bank deposit, plus cover all the other costs. So practically speaking, if you're buying a $400,000 property, you're going to need about $40,000 in deposit. A $500,000 property is going to need about $50,000 and so on. So you can just get the purchase price that you're looking at doing and take about 10%, and that's how much deposit you're going to need to buy a home.
Now, you might have heard of a 5% deposit. So if you've been talking about it with your mates over a barbecue, 5% is a very common amount that comes up. Now, in more recent times, the banks have tightened up their policies and procedures and credit criteria. What that means is the true 5% loan deposit is probably a thing of the past. There are some lenders still doing it. However, it's more an exception than a rule nowadays.
There are ways of buying a home without any deposits, and we've got other videos on that. You can look at things like guarantor home loans, using the first homeowners grant, or even gifted funds from family members. But we'll go through that in the other videos. You can click below and check them out. Nathan, but I don't really get it. So I can be earning $1 million, but why do I need a deposit? That doesn't make sense. I'm earning heaps of cash.
Well, Jaden, the reason is the banks traditionally want to see that you've got a little bit of hurt money in the transaction. So 5 to 8% of the purchase price is an amount that they can see that you've worked hard enough, that you've earned a little nest egg towards this purchase, so that if it all gets too hard, you're not just going to throw the keys back and say, oh, it's not my problem.
Realistically, the banks look at this on a risk basis. So the less deposit you have, the more money the bank's putting it in and the more risk it is for them. So that's why you'll see people throw around, oh, you need a 20% deposit, and that's just not true. Although the banks would prefer that, and they'd love you to have more deposit because it's less risk for them, the reality is these days you can buy a property with as little as 8 to 10% deposit. But like Nathan said, unfortunately you do need some deposit to get into the property market. Nanos, so another thing that I've heard, barbecue chat was genuine savings. So why does that matter and do I need it?
So once again, if you're putting down your minimal deposit, which is 8 to 10%, the banks have a requirement where they see that you've saved that money over a period of time. So an example here, if you're buying for 500,000, 8% is 40 grand. Now, of the 40 grand, they want to see at a percentage, which is 5%, held up in a bank account for 3 months or longer. So on a 500,000 purchase, that's 25,000. All once again they're looking for is that you've not got the money, quick sticks from a family member or someone's borrowed it to you. They want to see that skin in the game you've earned and you've built that savings up over a period of time. Interestingly, if you don't quite have this savings saved up, you can demonstrate it by another way, which is showing that you've been renting through a licensed real estate agent for 12 months or longer.
So Nathan, I guess as they say, well, some people might say, the bigger the deposit, the better. So what are some advantages of having a bit more deposit where possible, and I guess even the downsides of it?
So with the lender's mortgage insurance, as we know, lender's mortgage insurance is applicable when lending over 80% of the property value.
Or you've got less than 20% of a deposit.
What that means for you is when you're lending, whether you've got a 5, 10, 15% deposit, the more deposit you have, the less the compulsory lender's mortgage insurance will be for you. So as an example, if you're putting down the minimal deposit of 8%, the lender's mortgage insurance is generally going to be at its highest point. If you can come up with only an extra 2% deposit, so it might be 10 grand in some instances, that can literally halve the cost in the insurance. So having that little bit more deposit can reduce a lot in costs.
And it's like anything. If there's more risk to the bank, the lender's mortgage insurance is going to be more. So the less deposit you put in, the higher loan amount, the higher the lender's mortgage insurance cost will be. But I guess, Nathan, I know when when I bought, I only had a small deposit and I used lender's mortgage insurance to get in. So what are some benefits of having a lower deposit and getting into the market?
Well, one is it's an opportunity cost. So think about saving that deposit and where the market might go in the future. It gets you in the market today, here and now, especially if you're paying rent. Rent money, as some say, is dead money. So you can get in the market, lock it away. And the good thing is with the mortgage insurance, it's a one-off premium. It gets added to the loan and it covers you for as long as you've got that loan with the bank. So that's it for today, guys. So let us know your thoughts in the comments below and what you thought of genuine savings. Until then, see you next time.